So the first trading week of 2025 has come to an end, and this is my review of the market activity and my own trading in that time. I want to preface this video by saying that I don't feel too good, so forgive me if my voice isn't the best, or if I am down with a cold, or if I sneeze or cough at any point during the video. 2025 is off to a start, and I want to review what happened during the week now. The first week wasn't a full week, as we know, New Year's Day was on Wednesday. So the first 2 days of the week were the 30th and the 31st of December. And I actually happened to take a trade on Monday, which was the 30th of December. I, in this week, took three trades. One was a 3 hour win, that was on Monday, and the remaining two were losses. So I lost 2 R and I gained 3 R for a total net profit of 1 R this week. This is the weekly candle. This is what happened this week. Let me go down to the lower time frames to show my reasoning and the trade that I took. So if I go on this is a Okay, this was the trade that I took on Monday. This whole area is a daily fair value gap. It's visible on the daily time frame. And what happened was that price had traded into it and had failed to push lower. My draw on liquidity was this low denoted by this purple line. It's a low that was created in November of last year. And so when price rallied, so this was the low that was created. When price rallied away and found resistance at this weekly fair value gap, I was anticipating this low to be taken back. What happened was that during the festive period, price traded into the daily fair value gap and then stalled, did not trade through it, but also did not get to the liquidity targets that I had. So I was anticipating price to trade bullishly from that daily fair value gap. And so all I wanted to see was a liquidity sweep inside the daily fair value gap, which we got on Monday morning. So if I go down to the 15-minute time frame, which is where I executed, we will see my entry. So this was what happened during New York session on Monday. As you can see, price traded above the high that was formed in the daily fair value gap. And with this next massive bearish engulfing candle on the 15-minute time frame, see how beautiful it was. That was my entry. I took a short position here. My stop went above this high because I'm anticipating that to be a swing high, and my target was 3R, which raced beautifully to my take profits. So that was the trade that I took on Euro USD that made me a profit on Monday. Then I took a loss after price had traded down and taken out the after price had traded down and taken out the low, which is this low denoted by this purple line. I was anticipating at least a short-term bullish reaction, and this was where it happened. So we can see that when price took out the low, it happened between London kill zone. These green dashed lines are London kill zone. The purple ones are New York kill zone. You can see my indicator prints the kill zones for me. So although price traded below it outside of the kill zones during New York kill zone, the only thing I wanted to see was a bullish engulfing candle because I was anticipating some short-term bullishness. So that was denoted by this bullish candle. You can see that after price consolidated for a bit, this candle engulfed this previous candle. And so I took the trade. My stop went below this candle's low. I was targeting Asia high for a little better than 3R. And we can see that that resulted in a loss. The other trade that I took was on the pound dollar. If we just go to GBP USD, you can see that here I was anticipating a short trade. So when price failed to rally after taking out the low, I anticipated that the bearish momentum will continue. Now, I have already set up this chart for what I'm anticipating in this coming week. But if you go down to the 4 hour, before this daily fair value gap that you can see was formed, on the 4 hour, there were two fair value gaps. This fair value gap right here, which I was anticipating to be a breakaway gap, and then this fair value gap right here. So on Friday, let me just make that one green so it's a little easier to see. So it was a 4 hour fair value gap, and I was anticipating price to trade into it to continue moving downwards. However, what happened was that when price traded into the fair value gap on Friday, this was where it happened during London session. Price took out Asia high and then traded into the fair value gap. When this candle printed, you see there's a beautiful bearish engulfing candle on the 15 minutes. I took the trade and I was targeting Asia lows. I was targeting 3R. As you can see, price initially moved into a bit of profit and then reversed, ultimately taking me out. Then it didn't go anywhere at all, just kept consolidating for the rest of Friday. So those are the two losses that I took this week. And I will talk about what I'm anticipating in my forecast video, which I'm going to upload next after this one. So, all in all, it was a pretty good trading week. I'm happy with my risk management. I risked 0.5% on every single trade. I'm happy with the 3R profits that I took. One thing I want to implement this year is that I want to take 3R on every trade. I noticed that a lot of the time I'll take a trade and I'll get 2R, 3R, but because I'm holding for maybe a 4R, 5R, or a 6R target, I often end up losing those trades. So I want to see how much more profitable I'll be if I cap every trade at 3R, regardless of what it ends up doing. This means that I'm not going to have those 7R trades anymore. I'm not going to have those 6R, 8R trades anymore. But I'm hoping that it also means that I'll have a lot more winning trades under my belt.